Welcome back to Market on Close. I'm Marley, Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. Here's some final thoughts on the session today. Of course, what I would argue might be the top story is this Paramount Skydance launching a hostile takeover bid for Warner Brothers Discovery, going straight to shareholders with a $30 per share all-cash offer after losing out to Netflix in a fierce bidding war. The move comes just days after Netflix struck a $72 billion deal to buy Warner Brothers Discovery studio and streaming assets, a combination that's already drawing heavy antitrust scrutiny from Washington and from industry critics. Paramount CEO David Ellison says that his offer, which is backed primarily by his family and Redbird Capital and a few big banks, would face a faster regulatory path and keep the company intact. Shares of Paramount and Warner Brothers Discovery both moved higher today. Paramount shares closing the day 9% higher as investors brace for a takeover showdown that could reshape the entire streaming landscape. Netflix closed down almost 3.5% today. And the robo-taxi race hit another milestone today, with Waymo saying it has now delivered paid robo-taxi rides that exceed 450,000 per week. That surge underscores how quickly self-driving cars are moving from pilot tests to real revenue-generating services across multiple cities here in the U.S. It also shows how wide Waymo's lead over competitors like Tesla is. Now, that said, with more entrants racing to deploy these robo-taxi fleets and regulators still scrutinizing their safety, the next 12 to 24 months could determine who dominates this emerging autonomous ride landscape. For investors and consumers alike, the bet is no longer on what the car is like, but on what fleet actually delivers safe, reliable rides at scale. Important to note, Tesla also got a downgrade today from Morgan Stanley after a new analyst assumed coverage of the company. Sam, what caught your eye during the session today?
Well, Marley, we obviously had these sort of additions to the S&P 500, and Carvana was one of those, rallying in double digits, ending up over 12% after its addition now to the index. The stock gaining in double digits and is up around 120% now year to date. And this has been really described as a turnaround story. I mean, the stock was trading up around $360 in 2021 before hitting a low point of around $4 in late 2022 and has been sort of steadily climbing since then, hitting a new high today. So that was something to watch. Expectations of a hawkish cut, though, pushing rates higher, as we were just talking about. The benchmark 10-year yield hitting 4.18 today. There is a correlation, of course, between bond markets globally, like we're seeing in Japanese yields, which are at the highest since the 2000s. As Ben Emmons over at FedWatch writes, U.S. Treasuries are caught in a sell-off that's not only related to the rate cut this week, but also how the dot plot may play out, adding that given the economy showing signs of strengthening, yields may retest the 4.25% area near term. But of course, as KG just pointed out, Marley, that number could be conservative. But for now, what are you looking at as we head into tomorrow?
We've got some earnings coming tomorrow. AutoZone and Casey's General Store. For AutoZone, analysts projecting EPS of about $32.35 for the quarter on revenue of $4.64 billion. That would represent about 8% year-over-year growth. That's a significant pickup compared with the more modest growth last year. The expectation also suggests that AutoZone could be rebounding from some of the earnings headwinds that it saw in recent quarters, but investors do remain cautious because the company has occasionally missed on margins and profitability targets. For Casey's, though, revenue is expected to be about $4.5 billion with EPS of about $5. These would reflect continued growth in both in-store sales and fuel. Casey's has a history of delivering quarterly beats, so we will see if they can continue that trend. We've also, of course, got the FOMC meeting kicking off tomorrow, but we won't get that interest rate decision until Wednesday afternoon. How about you, Sam? What will you be watching?
Well, there's a couple of things tomorrow that are all going to be on sort of the macro front. We'll get that data from the Job Openings and Labour Turnover Survey, or JOLTS, at 10 a.m. Eastern. Now, right now, we only have data available through to August, which showed 7.227 million openings. This was one of the data prints, remember, that got held up in the government shutdown. So there is expected to be even more scrutiny on this release, particularly as it is another piece of evidence of the jobs market before the Fed comes out with its decision on Wednesday. Now, as we've already discussed with KG, the 10-year note auction tomorrow, markets like to keep tabs on demand for these sales to get a sense of where investors think the Fed is at and how they're thinking about inflation expectations as well, particularly as yields have been pushing higher globally, as we discussed a little bit earlier, Marley.
Yes, and it's Fed week, so tomorrow we'll kick off that FOMC meeting. We'll get some of that important data that could affect their decision, but that is going to do it for us today on Market on Close.